Welcome to Ty's Daily Market Update, specially produced for Sompro TV's Global Investor Network clients. I'm Ty Wong reporting from New York, and it's Monday, July 6th. Saudi's slash main oil price to a rare discount as the market dives. So Saudi made a big reductions in its crude oil price for buyers in Asia, selling barrels at a discount for the first time since it embarked on a price war in 2020. Before that, it was 2015, and I think before that was a great financial crisis. And this is because we're getting a big surge of global supply now that Hormuz is open. So Saudi Aramco said Arab light oil for next month, they reduced it by $11 a barrel to $1.50 beneath the regional benchmark. And basically it's saying how fast these Persian Gulf producers have been able to ramp up flows now that stuff is coming through the Strait of Hormuz. Brent oil is now back at its pre-war levels, and the market is reporting that even with this deeper than expected cut, several Asian crude buyers at the Saudi prices are more expensive than supplies from other regional producers. Now, whether this really continues for a long time is unclear, but what it says is a lot of these producers probably struggling with not being able to sell as much oil as they've been used to over the past few months, and they're taking the opportunity to just get some cash. So you have a flood of trapped barrels that it's coming through the Strait of Hormuz, and meanwhile, places and a lot of countries have actually cut back their consumption. I believe Korea had done so very effectively. So now all of a sudden you have a big supply in the market. As a matter of fact, Saudi made larger cuts to buyers in Europe, reducing all its grades by $15 a barrel, and it cuts U.S. crude supplies by $8 a barrel. By the way, this would be a very good time to refill the strategic petroleum reserve. Hopefully they're doing it without telling the market they're doing it, because that would probably drive prices up. So just taking a look at Brent. Brent is consolidating down around the pre-war range. I mean, right here, pre-war range, we're creeping higher, as the threats increase. And this is where it all started. We're right back down to that level. Now, gasoline and heating oil, are sort of bouncing. It hit the low about a week ago and now grinding a little bit higher. So Trump might not get much more gasoline price reduction, although if he complains about it loud enough, it may have some impact. And we can see oil prices dipping again down to 380. I think under 350 would be a very good short-term goal. Not sure we're going to get it there. So taking a look at the markets, of course, we look at Korea first. This is the weekly. We did get the 2 consecutive drops for the first time in a year, as I mentioned in our last update on Thursday before the long weekend. So let's see if it can steady here. Really, didn't change very much, down a little bit today. We're going to keep an eye on these charts because I think the way that Korea goes is often the way the U.S. goes in the short term. Now, the U.S. actually, July, I reported, is a seasonally very good month for stocks. It's been a good day so far with technology and communication services. That includes Facebook and I believe Google going higher. So I was worried about forming a top here, and we have this little wedge, but now we're trying to break above that wedge. This is starting to look like we get a good July. We certainly, if we can make new highs, it would kind of negate this top, which is pretty important. On this potential top, I should say. So S&P up 0.65% in the early afternoon. Bonds are mixed, not a lot. Barely changed. Crude is steady. Metal's a little soft after having a good latter part of the week, but it's holding on to recent gains. So I think that is supportive, at least in the short term. And crypto is even a little bit higher. Crypto had a very, very rough month, and hoping for a better one. So SK Hynix is kicking off its $28 billion U.S. listing. They started the marketing process today. It'll start trading on Friday. 18 million common shares, and it's already gotten pretty good demand, drawn more orders than there are ADRs available. By the way, I checked, it's not available through Schwab, so I'm probably gonna have to buy it in the secondary market, and I think I'm gonna end up paying a premium for it because as I've said before, SK Hynix is forward PE is something like 6, which is really quite a good value. This is SpaceX had the largest IPO in history earlier in June, but this is about the same size as Saudi Aramco when they came to the market. So this is $28-29 billion. We'll start trading on Friday. And this is new supply, and I think they'll probably get plenty of demand for it. Now, apparently, holders of U.S. instruments will be able to cancel them and receive corresponding number of sold traded shares. Now, whether or not you can reverse that is unclear. We won't know necessarily how this will work until people try to do it. And the ADR program will not expand. It's just going to stay the amount that is 18 million shares. And we'll see if it's actually going to be really fungible. Can you exchange shares back and forth? If you can, then you're going to, those shares are going to trade the same as they are SK would trade in Korea. But if not, the US premium is probably going to stay because of the sort of the lack of, there are not that many shares at the end of the day. Offering being led by some of the big banks, and it's going to be trading under the symbol, people call it SKY, but SKHY. I think there's going to be a lot of institutional interest. Americans have heard of Samsung, but very few have heard of SK Hynix. So I think it's going to be institutional driven rather than retail driven, at least initially. So, taking a quick look at the Fed and where market is looking for the Fed to do now in this later this year, but I've always been looking at December, and the probability of that the Fed doesn't hike has slowly risen over the past few week or so. Thanks mostly to the payrolls data, but it's still 77%. It's very overpriced. I mean, I think the right percentage here is probably 35%. I see it. Something has to happen with inflation to really get the Fed to hike rates. I just don't see it. Okay, we started looking at this last week, but I wanted to look at it more in depth. The S&P 500, July, historically one of the best months of the year, along with October and November, and the last several years, last 6 years of Julys have also been good. So I would be a buyer of this. I would buy dips if we get it, but I think historically this is pretty solid history. The dollar, not a very good month for the dollar. And the dollar, if the data starts to come in a little bit softer, particularly the employment data, I think bonds will rally and the dollar will decline. I think if you're long dollars, taking some profit probably may not be a bad idea. Gold, generally a pretty good month for gold. I mean, down a little bit in 2025, down a little bit in 2022, but solid gains for the rest of those years. I do like gold on a tactical basis here. I don't think it's going to run away, but we could get back up to 4,400 or something like that through the course of months. That wouldn't surprise me at all. Good for gold. And then Bitcoin, actually, July, a pretty good month. Bitcoin down in 2023, but otherwise up 5 out of the past 6 years. Bitcoin, I think a lot of the longs have been pushed out. Like I said, I also don't think it's going to run away much higher. But could we get back up to sort of the 68,070 level? That doesn't seem out of court, especially if it's a good month for equities. What do we have this week? Data, we had PMI and services. They were pretty much on consensus, nothing to really write home about. Prices are lower, employment is higher. So those are generally good things. Tomorrow we see ADP, the weekly number. Let's see if it stays around 30,000. If it starts to dip, that'll tell us some early clues about what the employment picture looks like, if it's continuing to decline or steadying. We have a bunch of auctions this week, 3-year, 10-year, and 30-year. And then we get the FOMC minutes, and these would be the first minutes, for new Fed Chair Warsh. They don't usually tell you a lot, but definitely we'll look at them and see if there's any new clues. And then on Thursday, we get initial jobless claims. Like to see it stay around 215. And then, we're going to get starting earnings off this week. Pepsi, I think, reports on Thursday. The major finance houses, Goldman, JP Morgan, Citi, they report next week. And then the big tech reports the last week of the month. So relatively quiet week after payrolls, but definitely things to look at. Thanks so much for joining me today. I'll see you again tomorrow.